Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. How to profit from the knowledge of insiders buying and selling. Last week was a good example of that. Do you use insider trading information in your trading profitably? If not, you could consider that. Where do you find insider trading status? Q Stock Fundamental Scorecard has that. You can use it in an insider trading first workflow where you begin your analysis with the stocks insiders are buying to find long candidates, or you could start with stocks insiders are selling to find short candidates. I usually do not do that. I use a top-down or bottom-up or fundamental first workflow. When I find a 360 degrees trade candidate, I notice whether insider trading is aligned with the trade. It is not an essential factor. Of course, it is not a sufficient factor also. It is nice to have for swing trading. And it needs only a click more or a glance more to find that out. Other dimensions being equal, I prefer to buy a stock with insider buying, especially when the stock is at a lower price level. Other dimensions being equal, I prefer to short a stock with insider selling, especially when the stock is at a higher price level. This was the case last week. During last week's market recap, I was surprised to see several stocks at a very high price level having insider selling. It caught my attention. I shared those stocks in the market recap and later on Twitter. I tracked those stocks for potential short entry points on technical charts, which were the stocks with insider selling that I shared on YouTube or Twitter last week. These were the stocks ABNB, APP, JPM, Netflix, and PLTR. All of that, all of those stocks had insider selling in Q Vital scorecard. As is often the case for Q analysis, those anticipations for what? For potential short entry point came true. All those stocks gave shorting opportunities using either daily or intraday entry techniques. And 100% of those trades were profitable. I had a bearish inclination on the market as I shared in last weekend's recap. I shorted all but one of those stocks and made a profit from each of them. Later today, I'll review those stocks and their entry points and techniques. Insider trading is only one of the dimensions that you can use effectively in Q trades. Using all the Q dimensions, you end up with truly high probability and low risk trades. If you are watching this video, you probably already know that. Greetings, I am Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using only one trading system, Q, that I developed myself. Using only one system simplifies my life. Here are my email IDs if you would like to contact me, and the website Twitter handle, and YouTube channel where I regularly share stock and market analysis. Disclaimer: this demonstration is for educational purposes only. I'm not an investment advisor. It is not a trade recommendation. Trading involves risk, and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. It has multiple components. I'll use several of them today. Q charts, instruments that often move the market. We start with dollar index. In the weekly, dollar index is bearish in color, shape is indecisive. Looking back, the bearish headwind caught the very high. In the daily also, the bearish headwind caught almost the very high. Since then, price has come down. It is now coming down with trendline resistance above it, and it has white direction line support some distance away. The weekly shape is indecisive, and Friday's candle shape is also indecisive with both upper and lower tails, and it has a bull release signal. However, we have a trend line resistance. Unless that is broken, I am not going to be bullish on dollar index, and if it breaks the trend line resistance, it may put pressure on the market. On the other hand, I am not willing to short now because of the bull release signal and the indecisive shapes in weekly daily. But if it can go down next week, breaches the low of Friday, then I think the market will be helped by that. The next support is some distance away, not very far, but some distance away, enough to provide some support to the market. And that may happen if it can breach the low of Friday. At present, I have no preferred direction for dollar index. That's why I have drawn the solid arrow lines in both direction. I have no preferred direction. Mega cap index. It tremendously influence the market more on some pockets than others. Here also we have a bearish headwind. In weekly, we saw in case of dollar index, after bearish headwind it fell significantly. Here we can see earlier when the bearish headwind came, price fell enough to give us swing short trading opportunities that were profitable. So we'll see if it can come down from the bearish headwind now. The weekly shape color both are bearish. There is a trend line support but some distance away. In daily, on Friday we have bearish shape, bearish color. It broke below two trend line supports. These supports hold very well, so breaking of them is also significant. I note that, and I also note there are additional trend line supports nearby, not very far. It is not unlikely that mega cap index will find support at that point, but if it does not, and if it breaks the trend line supports in both daily, weekly, that will certainly be bearish for the market. And I think the Nvidia earnings is coming soon. If the stock drops after earnings, it is possible that it will break the trend line supports in weekly, daily. If we ignore the trend line supports, but I don't ignore them, but just saying if I ignore, then you can see that it is looking bearish. Certainly it doesn't allow buying, doesn't allow shorting because of the trend line support. Now this is mega cap custom index. In the last market recap, I showed that, let's go back, that though the mega cap custom index, it was here, made a new all-time high last week. This week it reversed, but last week it made a new all-time high. But in that market recap itself, I showed the mega cap ETF, MAGS. It was not making all-time high. It was moving sideways. And once again, here the bearish headwind in the daily chart caught the very top. I said in the market recap, if the sideways move can break down, that will be bearish. So mega cap custom index has trend line support, but MAX has no support. It broke all the immediate trend line supports. That is bearish. And what is the difference between MAX and custom index? Custom index has Netflix, MAX does not. And this is again something I showed in the last market recap. The custom index was held up only by Netflix. And I was willing to short Netflix, isn't it? That's what I mentioned in the last market recap. I'll review that stock again later today. In any case, looking at MAGS, now it allows shorting, doesn't allow buying. Market breadth, internal health check. Usually the market follows the internal health, not the other way around. And I repeated that several times, if I remember correctly, in the last market recap. And because the market health was weakening, internal breadth and several other dimensions were weakening, though the market was at a high price level, I was not willing to buy. Worked beautifully. It gave a lot of profitable shorting opportunities this week, and I was ready to capitalize from those. Let's see what happened to the breadth from last week to this week, and maybe we may go back one more week back also. The market breadth total view, broadest view of the market, internal health check. I kept on saying, looking at the percentage of stocks above 50-day moving average, the yellow line, it was coming up from below, but it never crossed the midpoint, 50% level. Looking at that, I kept on saying that it was a recovery in a downtrend. It was not an uptrend yet, and now it has declined again. That shows the downtrend is now resuming. Though market fell sharply on Friday, that is true even for this total view broadest index, I noticed that there was no distribution count, and small cap is underperforming versus large cap. Growth is starting to underperform versus value. So small cap growth is not doing well. But what struck me was the absence of any distribution count, and of course there was no bingo or phoenix. Phoenix would have come as this color candle, bingo would have come as down arrow magenta color. We don't have a magenta color candle, we don't have a magenta down arrow, so we didn't have any of the momentum signals, neither the distribution count, not the bingo, not the phoenix. So I noticed that though market dropped, it was not broad and heavy selling across the board. This is last week's at a glance chart of the total view. And this is exactly what I said, quote, I would not like to buy, I prefer to short provided the memory support is broken. This memory support. This is what I said in the last market recap. Did the memory support break? This is as of today. Let's start with weekly. Weekly color is now clearly bearish, shape is bearish, and it has created a false upside breakout. In daily, on Friday, color shape is bearish, created a false upside breakout, and it broke the trend line supports that I mentioned of in the last market recap. And what I said, if it breaks the trend line support, I would like to short. The breaking started on Friday. So on Friday, you could start to short, but some stocks I shorted earlier. I'll explain that later. Certainly, it is now looking bearish. But again, I take this trend line supports seriously. It is some distance away, but not a lot far away from Friday's low. So I'll be cautious about shorting. I don't like to short when trendline supports are nearby. And I'll show some market instrument where the trendline support is even closer, not as far as we can see in the broad index. In any case, looking at the fact that several instruments, including Megacap Index, including Total View Index, closed right at the low of Friday, right at the low of the week, I think the chances are higher that it will fall more. But I am again not very happy to short when trend line supports are nearby. I'll see how the market moves next week. Let's see what other insight we can get as we continue with the analysis. From total view, drilling down into Nasdaq and NYSE composites, first thing to note is that the downtrend is resuming in both the pockets, and the other thing to note is that Nasdaq is underperforming, and this is again something I showed in the last market recap also. Though the mega cap index was outperforming, made a new all-time high, mostly tech stocks, actually all tech stocks, mega cap custom index has all tech stocks. Nasdaq as a whole was underperforming, and that is continuing. If we look at the major indexes, internal breath again, only thing noteworthy is that all of them weakened this week, both in terms of percentage of stocks above 50-day moving average and also in terms of 3-month new high low. None of them are near oversold condition. So it weakened, downtrend is resuming from internal health perspective, but not oversold in any of the dimensions so far. Is the market looking oversold from some other angle? We'll find that out. External view, Q charts. This is how most people around the globe see the market. Last week I said I didn't want to buy, I would prefer to short. Those conditions came true under which I was willing to short, and this week all the market ETFs came down. Small cap IWM is the worst performer, down by a huge 3.6%. And the best performer, relative best performer SPY is also down by minus 1.6%. So it is down across the board for the entire week. Let's look at a glance weekly daily charts from the worst performer to the best performer. IWM. Weekly color shape bearish, closed right at the low of the week. However, and this is the instrument I had in mind, stopped right at the trend line support. In daily, IWM was and is inside a triangle pattern. It broke through several supports but stopped right at another trend line support. Friday's candle shape and color are bearish, and I also noticed that it is nearing jump thrust low, unsustainably low level. Not there yet, but approaching that level. And when I look at those two factors, that it is right at trend line support in weekly and daily both, and it is approaching jump thrust low, I am not at all willing to short. But if those supports can break next week, I may short. Can I short as swing trade? No, because my stop will be far away. Then I have to look for shorting opportunities using intraday fine tune chart or pivot chart. I'll not be able to use the daily interval because my stop will be far away. And on the other hand, if it can reverse up from the trend line support in weekly and daily, I'll be happy to take a low risk long trade, probably using short put vertical. Will not mind taking it with long call vertical also, because long call verticals have higher reward risk ratio if that happens, if it reverses. But right now, looking at Friday's close, certainly doesn't allow shorting and buying both. Last week I talked about digging a bit deeper to unearth some insights, and this is what I showed in the momentum chart, HSLI signals of IWM daily interval. I showed that it had a series of ice hole failures, that it was below the 50-day moving average and it kept on failing. And looking at that, remember last week when I had the market recap, looking at a glance chart, if I go back, we were here, right? Last week we were here. I said I could not buy, I could not short because it was inside a triangle using the at a glance. But when I looked at the momentum chart and a series of isol failure, I mentioned that unambiguously that this chart allowed shorting. Interestingly, this week we had another ice hole failure. It could never go much above the 50-day moving average, and using precision entry pivot chart, you could easily short it on Friday. You could short it on Thursday also. This was a 4 trading day week, so you could short it on Thursday, Friday both, when after the open price came down. Tuesday and Wednesday after the open price went up, so I would not like to short. But Thursday, Friday it could be shorted. I did not short it. Dia last week. This is exactly what I said. I would rather short it if it break below the congestion area here, this congestion area. This is what I shared last week. It is very useful in my view to look back, see my analysis and review how it played out. I anticipated a short trend for Dia if it broke below the congestion area. And I said I would rather short it, not going to buy last week. Did it break the congestion area? This is Dia. Let's start with weekly again. Again, color, shape, both are very bearish in weekly. Earlier had a bearish headwind and now it has created a false upside breakout at that level. Daily headwind also caught almost the very top, almost miraculously. And yes, it did break the congestion area. Here, the support is far away. So this chart clearly allows shorting. Not IWM, because IWM has support immediately after Friday's low and close, but not Dia. So if I had to choose one of these two ETFs for shorting, I would choose Dia, not IWM, though IWM is the worst performer. That is how I find high probability trades, not only looking at where it moved last week or last day, but also where it is higher probability to move next week. And here the support is far away. So that was Dia, broke below congestion area, allows shorting. Next one is QQQ. weekly shape color bearish, weekly created false upside breakout. There is a trend line support though some distance away. In daily, Friday's color shape very bearish. This we can see across the board in all market ETFs. Created a false upside breakout here also. Interesting, isn't it? Many of the instruments created false upside breakout. What did I say about that in the last market recap? I'll come back to that if you don't remember. You will see how the anticipations are playing out exactly as anticipated this in this case, and often almost as anticipated. In any case, weekly daily are bearish, but there is a trend line support in daily also, though some distance away. If the trend line supports were not there, of course it allowed shorting. Now also it is some distance away, unlike IWM. So if I want to short the ETFs, which I don't do usually, I look under the ETFs to look at constituent stocks, find better trade setups. But if I were to short any of the ETFs that we saw so far, my first preference would be DIA. Next will be QQQ. IWM, I'm reluctant to short looking at weekly daily supports. Last one is SPY. Again, the same thing across the board. Weekly color shape very bearish, closed at the low of the day, low of the week, created a false upside breakout. I'll come back to that. Daily also closed at the low of the day, created a false upside breakout, and it broke some trend line support, but there are other trend line supports nearby, not immediately below Friday's low or close, but some distance away. So this one is right there with QQQ for shorting. So first preference would be DIA, then QQQ SPY, last will be IWM, which I would rather not short. Let's continue with the market level analysis. Bucket analysis pinpoints reversal points with remarkable accuracy thanks to Dr. Jeffrey Scott. After watching whose videos, I implemented it in Q and I made it real time. This is a good time to look back couple of weeks. 2 weeks ago in the market recap, this is exactly what I showed. It was neutral bucket analysis, meaning exactly 50% of stocks were above mid-Bollinger Band, exactly 50% was below mid-Bollinger Band. Perfectly balanced in terms of this graph 2 weeks ago. And what I showed last week, notice the 50% balanced picture. Last week, I showed that though market indexes generally went up, internally more stocks came below mid-Bollinger Band, and this was one of the reasons for me to say last week that I was more willing to short. Why? Because remember, again let me repeat, market follows the internal health, not the other way around. Internal health was weakening, market was going up. Almost always the market follows back the internal health. So market was expected to fall and it did that. Did it? Notice last week's percentage of stocks below mid-Bollinger Band, 56%. What is that today? Now it is 67%. So from 50% to 56 to 67%, it is gradually weakening, clearly turning bearish. And I think at the close of Friday this week, many people are bearish now. But notice how I could be bearish earlier. In fact, not only in the last market recap, the one prior to that also, I was not bullish on the market for swing trading purposes. So that analysis for 2 weeks in a row once again came true, aka profitable. What is the percentage of stocks below lower Bollinger Band? 19.3. Not there yet, but nearing the oversold condition. And the other way to assess oversold condition is when percentage of stocks below lower Bollinger Band, this lowest bucket less than -1, grows by more than 10% in a day. Here, it grew by a huge 17.2% in a day from 2.1 to 19.3. That's a huge percentage and huge number of stocks falling below lower Bollinger Band in one day. In that way, it is now already oversold. So now I have at least two reasons to be very cautious about shorting or stop shorting. One is IWM stopped right at support, and second is this aspect of bucket analysis is showing oversold condition. I don't like to short in oversold market. I already shorted, I made a nice profit. I'll review some of those stocks, but now I'm less willing to short. What about sector, industry, stock breadth? It shows where the market came from, where it is now, and where it may go next. Longer term, 1 month view bearish. Longer term again, 10 days view turned more bearish. If you notice the percentages, generally it turned more bearish from 1 month to 10 day, and then on 5 day, though this week was a 4 day trading day week, still here the analysis is 5 days, turned more bearish, and 1 day turned even more bearish. It is gradually turning more and more bearish, and this is not oversold yet. So some aspects we are seeing oversold condition to expect a bounce. Some we are not seeing oversold condition. Some we are seeing at trend line support. Some we are seeing some distance away. In either case, it does not allow buying. Whether to short or not, to be cautious about shorting or not is the question. Let's continue with technical breadth. Weekly, across the board it is bearish, and now it is very close to being oversold. So this is again telling that be cautious about shorting. On the other hand, the bearish headwind alert is saying that for stocks at a high price level, and remember the stocks I shared in the last market recap with bearish inclination, at least some factor wise, they were all at a higher price level. Those, it seems, or similar stocks at a high price level will continue to come down because of the headwind alert. Though for the liquid stocks as a whole, I am cautious about shorting now, looking at the oversold condition. Why I say that? When all these categories hit 80% or so, only this one is at 77%, all the others are well above 80%, then it is oversold market, to be cautious about shorting. Again, stocks at a higher price level, we may find shorting ideas from there. That was weekly technical breadth. Daily technical breadth. Here it is across the board bearish, very bearish, well above 80%. But daily picture is actually not oversold. Why? Because the percentage of stocks giving short setup, most of them are actually coming from price extreme middle, not at price extreme low. So it is not oversold. Again, reason to be cautious, but it shows that there are still shorting possibilities. Buying? No. None of the analytics so far told us to go and buy. Market level summary. The most important trading decision is whether and where to buy or short, or whether to stand aside. Very useful to look back. Last week, this is what I said. And let's look at the italics. This is exactly the slide I used last week. Some analysis, and then I said that does not support buying. At the same time, when SPY and QQQ are so close to a new all-time high, they will probably hit those levels. Exactly that happened. And what did I continue with? After that, after making a new all-time high, or from there itself, if the market starts to fall, I'll be happy to look for shorting candidates, but not yet, probably as of last week. But those things happened exactly. SPY QQQ made new all-time high, then reversed, created false upside breakout. Market started to fall. Some market ETFs I said I would like to short if they broke trend line support. It did that. For DIA, I said if it could break the congestion area, I would like to short. It did that. So all the things I anticipated happened just like the anticipation in the individual stocks happened, and I was ready. I was not second guessing. I shorted and made a nice profit. What is this week's market level summary? The market did exactly what I anticipated based on unambiguous Q analysis. Not because I'm saying it today, because you have recording of what I said last week. I used that preparation to short several instruments at probably the best opportune moment. Looking at the oversold market in terms of bucket analysis and nearing oversold condition in weekly finder and IWM near jump thrust low and nearby trend line support again in IWM, I am less willing to short now. I noticed the absence of bearish breadth signals on Friday. Though the market fell sharply, there was no distribution count, bingo, or Phoenix. It was not deep and broad selling. Looking at the oversold nature in real time on Friday, because bucket analysis I could see in real time. Also the supports in IWM I could see it in real time. I have booked full profit in several bearish trades I took. If the market recovers next week, I would like to look for buy candidates in small cap stocks, and IWM is one instrument ETF I mentioned I would like to buy using verticals if it starts to recover next week. I will not wait for the close probably if it starts to recover. I'll use precision entry pivot charts to take the trade. And it will probably not surprise anyone to guess that I have taken a small trade in the long direction using verticals in IWM. I made a nice profit last week. So for me it was okay to risk part of the profit to use a bullish vertical trade in IWM. I think knowing how I trade, you would not be surprised to guess that. Now, on the other hand, if it breaks support in IWM and several other market ETFs also have nearby support, not as immediate as in IWM, but they also have other nearby supports. If those all break, I may short again. But again, as I mentioned, I will not be able to use the daily charts for the ETFs at least to find shorting opportunities. The stop will be far away. I'll have to be cautious and use the intraday charts. For individual stocks, I may be able to find lower risk shorting opportunities using daily charts also, and that I look for only if the support start to break. As of the close of Friday, I would not like to decide on long or short trades. This is how I'll wait for next week's happenings. Review of last week's trade ideas. I did not share any trade idea as such, but I shared my bearish view in several stocks based on insider selling. And as I mentioned, I was surprised to see several of the rip-roaring stocks showing insider selling. They did not have a short setup at that time, but I tracked them. I traded, I shared a few of them and I traded most of them actually. Made a nice profit, more in some than others. The one that I did not trade also made a nice profit. Let's go through these stocks one by one. One was APP. Let's see, at least for some stocks I can show the insider selling score in Vital again. I already showed it in the slide. I showed it in the last market recap. So this is APP. I noticed the insider selling in the last market recap and it was one of the best performers. I showed that also. But it was having insider selling. And this stock I was not very willing to short and I did not because it had high earnings growth. and funds were accumulating, which was fine. It is not uncommon to see funds are going in one way, insiders are going in another way. Insiders will probably have better idea, and also funds do not report immediately. That data does not show up immediately anywhere. There is some lag. Insiders also there is some lag probably, but in any case, this one I noticed as one of the best performers, and surprised to see insiders were selling. How could it be traded? This is one I did not trade actually. So this is a 4 trading day week. So this week is continued falling. Tuesday, Wednesday, Thursday, Friday. Notice how it closed at the very top. I also noticed it was at jump high, but not thrust high. In any case, it was extended. And if you notice that, then on Tuesday, this is the pivot chart 10-minute interval. So this is Tuesday. When it broke below early range low, you could short it. You could probably book partial profit during the day itself and hold the remaining position for the remaining days, Wednesday, Thursday, Friday, for a much bigger profit. This is one I did not trade because of the high earnings growth. Airbnb. Last week I showed this also had insider selling. Let's see. Insider selling, and here the earnings growth was negative. So about this stock I was very specific that this would be one of the first insider selling stocks I would like to short. Weak fundamentals, but it rallied after earnings, so I was ready to short it. And as you can see, this also came down on Tuesday, Wednesday, Thursday, Friday. This was last week's close, right at the top, reversed. I was watching it using pivot chart. On Tuesday here did not go below early range low, but Wednesday it did, and I shorted it. By Friday I had a nice profit in the trade. I closed the profit. Looking at the somewhat oversold condition in some areas and IWM being near support, and I had a nice profit, I closed the full position in Airbnb. Okay, next one, Netflix. That is another stock I specifically mentioned that I was going to look to short. I mentioned about two stocks specifically, Airbnb and Netflix. I avoided talking about APP because of high earnings growth. And I noticed, see how I am getting ready. After earnings, it rallied, continued to rally for several weeks. This was last week's high. At that time, I am saying I am ready to look to short. What happened this week? Right on the first trading day, Tuesday, it had a bearish headwind short setup, and actually the weekly also displayed the bearish headwind on Tuesday itself, the first trading day. I shorted it, continued to fall down. I had a nice profit. On Friday I closed this trade also, booked full profit. Again, it had insider selling flag. I noticed that in all the stocks I trade, but as I mentioned, I was surprised to see several of the high flyers having insider selling. That prompted me to track those, and I used proper techniques, either using precision entry chart or daily chart, to trade those. So Netflix I traded Palantir, PLTR, Palantir, yes, Palantir, PLTR, again a stock that rallied, and I was noticing the media news like you all do for high flying stocks. People were gushing about this stock going to grow hugely. Somebody was comparing this with Tesla, from which point apparently Tesla grew by few thousand percent. Well, that did not happen, at least for now. And when I see those news, I also looked at its again insider selling status. And this is a stock I shared on Twitter. I'll come back to that. This stock was rip-roaring, apparently at a point from similar point of what Tesla went up by few thousand%. Well, why insiders were selling then? So I kept an eye on the stock. Let's go to the tweet. An interesting and useful, profitable use of the news. I use icon 100% real-time professional grade, not professional like, but professional news. And Palantir was one stock for which I was tracking news. And there was a news. When did I share the tweet? February 19th, Wednesday. You may read the tweet if you did not. There was a news. I did some more analysis using Google's Gemini. That news was that Defense Department, US government, Pentagon reduced its budget, planned to reduce its budget by 8% for several years, 8% each year for several years. And I found out using AI tool, Google's Gemini, that USA government, the defense budget, contributes a huge percentage of Palantir's revenue. I was already aware of the stock being at a high price level, and I saw it was starting to fall like a rock. Looking at the news, asking Gemini took me 5 minutes maybe max. This is a 5-minute chart, so I was not able to short it here. I shorted it around here. It kept on falling, and let's look at the daily chart now, or intraday for last few days. I could short it somewhere here, then it continued to fall. Wednesday Wednesday fell, Thursday tried to recover, Friday fell again. So again, this trade I made a nice profit shorting it by using the insider selling flag. And in this case, I noticed the news, used Gemini to find some more detail and short it at the right time. Very nice use I thought of. Professional grade real-time news. And the insider selling flag. And I took, see, how much risk did I take? Only this much in the trade. If I entered it here, this was my risk. My reward on that day itself was much higher. By the close of Friday was even more. So again, one trade where I used the insider selling flag. And the last stock that I traded using insider selling flag was JPM. This is also a stock about which I tweeted. JP Morgan. This is as of Thursday. It gave a bearish headwind in weekly JPM and bearish headwind in not bearish headwind, a breakdown in daily on Thursday. And there was a bearish headwind in daily earlier, but it broke the trend line support right at the open on Thursday. If I was, or if you were watching JPM, you would find it in real-time finder as a breakdown short setup. And if you checked its stock, again a stock at a very high price level, and because of last week's webinar, I was noticing if any stock is coming down at a high price level and having insider selling. Interestingly, this was also one. So I tweeted about it. I did not find it on Thursday near the open. That would be the perfect time to short. I found it after the close, and Friday using real-time chart I shorted somewhere here and I made some profit in the trade. Again, I did not hold on to the trade. All the ticker symbols ABNB, Netflix that I shared in the last market recap, and PLTR and JPM that I tweeted about, I used insider selling as one of the deciding factors, especially because my market view was bearish. These stocks were at a very high price level, and insiders were selling, I used proper techniques to take low risk short trades. And because of the market being somewhat oversold, I booked profit in all of them. This week's trade idea, I made a nice profit shorting the stocks I shared in the last webinar and on X or Twitter. Now the market is oversold from certain angles. It is at a support from some angles, and I prefer to wait before shorting again. I'm not able to buy stocks yet. I'm not willing to short a lot. Therefore, I would not like to share new trade ideas in this session. About IWM, I hinted about it. I will continue to share analysis on my Twitter. You may keep an eye on them. Thanks a lot for joining me today. Have a great weekend. I, I like to I look forward to seeing you in my next market recap. Have a great weekend, and as this live session show, I'm quite confident shows there is no reason not to do that, as I always say, trade profitably. Thank you.